Ένα πολύ θερμό χειροκρότημα. Όρθιοι να υποδεχτούμε τον Νίκο Bonatsos. Startup Grind. Καλά. Take a seat. Thank you so much for coming.
Thanks for having me.
It's amazing. So let me...
Is this working? No, it's not.
Yeah. So just need to open it.
Okay.
As Alexia is still on her way, we can kick off.
Yeah.
And let's just, take a step back. And I was wondering, first of all, how did you guys meet? I don't know. We have to learn.
Sure. So I met my wife at a networking event with other Greeks and Greek Americans in tech. And actually, there were some friends in the audience who were probably at that event back in 2011. So alongside one of the most notable Greek American VCs, George Zachary, who is a partner at CRV, we started that group to help Greeks and Greek Americans in tech get connected with each other, find jobs, find funding. Very similar stuff to what's happening on the ground here in Athens. Because when I arrived in the Valley in 2009, I realized people of Greek origin didn't know each other. So we started doing events. And back in 2011 was our third or fourth event. And Alexia was working as a reporter at TechCrunch back then. And one of her managers, of her editors, told her to go there in case she could find some people to be good sources of potential stories for her to break down the road. So she showed up over there. She was with somebody else. I was with somebody else. We met there for the first time, and we were professional contacts for a couple of years. Yeah, who would have thought, that event I would end up meeting, my future wife.
Things happen at networking events.
Things used to happen at networking events. Now, they're not supposed to happen any longer. I'm sure you guys, have read what's been going on with the Me Too movement and all that really embarrassing stuff in the world of tech, entertainment, and many more. Yeah, it was a different era. I sound like an old person now, but it was definitely a different era.
So tell us, how did you end up in Silicon Valley, and what brought you to, let's say, the mecca of startups?
Sure. So I was made in Greece. So Athens is my hometown. So I'm very excited to be here. I grew up a few miles from here, and I went to Polytechnio, where I did my undergrad. And, it's not that I'm an old person, but 15 years ago, when I was an undergrad, I had never met anybody who was eager to start a company or was eager to join a startup. Like, I had never met anybody. And now, 15 years later, there is an ecosystem, which is, great. Still early days, but actually, great. So while I was there, like a lot of other students who were ambitious, my goal was to escape from Greece. And the only path forward back then was to try and do some graduate studies in overseas. And I wanted to go to the US. So in 2006, ended up at the Harvard Medical School trying to do research in biomedical signal processing. But while I was there, it turned out to be a very, very painful experience for me because I was at the lab working with the same 4 people, trying to produce a new paper every couple of years. And my professor was walking in and he was like, "You guys have it easy. You're so lazy. A few years ago, we didn't have computers. We had to do all the data analysis work ourselves." I was like, wow, this doesn't sound too great for me. So I ran away as far as I could. Ended up in Tokyo, spent a year there, worked as a computer engineer. And then, like a typical Greek, I felt a little bit too young to start working full-time. So went back to school, spent a couple of years in the beginning at Cambridge in the UK, so clearly collected a bunch of degrees, and then Stanford. But while I was at Cambridge for the first time, I got exposed to tech startups. And I found the intersection of technology and entrepreneurship to be very intellectually stimulating for me. So ended up realizing, though, that the most ambitious tech founders ended up in California sooner or later, either to raise capital or to recruit executives or to find customers or to get acquired. So I was fortunate to get the Fulbright scholarship, and in 2009 moved to California. So over there, I was a student during my first year, and in 2009, everybody and their mother were trying to build a social network. So it was the time that Social Network, the movie, had come out. And I remember I went to Redwood City to the movie theater, and alongside some of my Stanford friends saw that movie and were so excited to go and build a company. Like, we're so excited. But we didn't have a really good idea. So we ended up trying to build a social network on top of LinkedIn. Because LinkedIn had just released its API to open up its platform. And unfortunately, we failed miserably. But during that process, met a lot of people and met a gentleman called Chris Farmer who changed my life. He gave me a chance to become a venture capitalist. And I took a leap of faith. I hadn't, I hadn't met many VCs prior to that, or I hadn't thought to become a venture capitalist back then, but ended up being a really good personality fit for me. So ever since, every year is better than the previous one, so no complaints.
So what is the personality of a VC then?
Well, you need to be an optimist, because frankly, the vast majority of the companies that you end up investing, and of course the vast majority of the companies that you meet, end up failing. And you also need to be somebody who has empathy for the founder, because trying to be a tech founder, a CEO, you gotta be really crazy. It's like a very hard job to do. So as a venture capitalist, you need to be empathetic and not be the kind of person who bosses them around. You're not the protagonist. You're the person on the background, like an advisor. So I guess the adjectives I've used so far: have empathy, be empathetic, have intellectual curiosity, because every day, every half an hour, you get to meet different people who, frankly, make you dream a little bit about what's possible in certain industries. And once in a while, you need to have conviction to get to back some of these founders in hopes that a few years later, you'll get it right. Yeah.
As you did with Snapchat.
Yeah, this was a good story. It worked out, so no complaints.
So maybe this whole social network thing was why you were eager to invest in something like Snapchat, but it wasn't obvious at all back then with these ephemeral messages. What did you see in order to invest in Snapchat in such an early stage?
Yeah, one of the beauties of venture capital is you can always rewrite history, because there's a huge survivor bias, so you can make up stuff that was not the case back then. But for sure, it was a very controversial investment opportunity back then, because the whole world was getting built on top of Facebook, and Facebook was a great force. Nobody thought that Facebook was evil back then, but now a lot of people think so. And everybody was trying to build on top of it to make sense of the data and make a lot of money and all these things. So Evan had a very specific vision from the beginning, which was make people smile more, humanize digital communication. It's like the conversation we're having right now. As soon as this event is over, pretty much all of it, will be gone. Whereas, till then, every single piece of digital communication was recorded for the rest of time. And then the third thing, you want to build the fastest camera application that had ever been built till then. He was very frustrated that even the native camera app was really slow. And that's why when he launched when one launched Snap back then, it was like very quick. You could take a photo and send it over to your friends. When we met him, he was still a student at Stanford, and some of the metrics were insane. Like, I had never seen this kind of engagement metrics. He didn't have a lot of users. He had 100,000 users, which is nothing. But 20% of them were using it over 50 times a day. I had never seen something like that. So it was clear that it was heading towards the right direction. And the founder had an insane level of ambition. So when we are considering an investment opportunity, we are primarily investing in people. So what are we looking for? Founders who are ridiculously ambitious, and founders who are learning animals so that hopefully will go the distance to become great CEOs. And Evan definitely had the ambition from back then.
So tell me, how many business plans do you get every week?
A lot, I probably get 500 emails a day. I would say 70 to 80 of them are people who want to pitch me ideas. I end up meeting with 700 to 800 now tech founders every year. We try to invest in 6 to 7 of them. We lose 30% to other VCs, and we win the rest. So it's quite of a funnel.
So tell me about the process. Like, how do you filter all these emails, and how do you actually have like a funnel that make you meet somebody and then invest?
Yes, I mean, as it is the case with a lot of people who work in business, like email is the worst thing, but also the best thing at the same time. The worst thing because you spend so much time on it, the best thing because people from all over, either through shared connections or out of the blue, email you wonderful things that you end up becoming business partners with them a few weeks or a few months later. So how do I filter email? We have some systems in place, have a couple of people at our office now who help me filter it. I always ask people to send me the pitch deck, and from there you can see if somebody, has the ability to structure their thoughts coherently. Sometimes you can see if the company has launched, what the early metrics are, if it's a product that's differentiated. But from there on, for our firm to invest in a company, it depends on the stage of the business. So if it's a really early stage company, within a week, a couple of meetings, we make a decision because we don't want to waste people's time. If it's a company that wants to raise a Series A or a Series B, like they want to raise over $3 million, up to $15 million, it takes us 2 to 3 weeks, depending on how much competition we have from other firms. And then if it's a later stage company that wants to raise, I don't know, 50 or 100 million bucks, over there it's a lot about understanding the metrics of the company because they've been around, they have some history, and that process may take a little bit longer, but it also depends on how much time you have. So the advice, I guess, I have for founders in the audience, always try to make your fundraising process some kind of competitive, because if that's the case, the investors force themselves to make decisions, faster.
It's crazy. The speed that you just mentioned is unbelievable when you compare it to Greece. So
yeah, but now in Greece things will get better, right? Because there are a lot of venture capital firms now in Greece. Like with all the funding from the European Investment Fund, there are a few $100 million that has to be invested over the next 3 to 4 years, which is amazing news for tech founders in Greece, like amazing news. And as a result, because the opportunities are not in the many hundreds investment opportunities, all the VCs will have to streamline their decision-making processes. Otherwise, they will be losing out on good business.
So do you actively follow more or less the Greek ecosystem? Do you follow the success stories and maybe try to invest in some of them?
Yeah, I mean, I would love to have an investment here so I can justify doing board meetings in the Aegean Sea in the summer. Like I would love to. Maybe, one of our future portfolio companies is in the audience. Like I try really hard every year. Hasn't happened yet. I think there are a couple of companies right now that as time goes by make me regret our decision to invest in them, but nothing that is very painful yet. I think if the Greek ecosystem gets to grow at a faster rate than what it's growing right now, it's very likely that we will be investing in a company from here. Like when people come and pitch us, we don't ask them for their passport. We don't care how they look like, what they did before, where they come from. Like we really don't care about that stuff. But am I in tune with the Greek ecosystem? Yeah, I'm in tune with the Greek ecosystem. It's really small. I think if we had a bigger room, like 4 times the size of this room, everybody who works in the Greek tech startup ecosystem could fit in the room. So, I mean, I'm sure, like after a year of networking with people, you get to meet pretty much everyone.
Yeah. It's true. It's growing though, and this is amazing. But we still don't have this unicorn that everybody's looking for,
Yeah, who do you think is going to be the next unicorn? Like, I'm really eager, because if you guys know, please let me know.
Starts with W.
We have a lot of capital. We just raised $1.4 billion. So we're eager to invest it in founders who are very, very ambitious. And we write checks that range from $500,000 to $150 million. So if you know, I'm all ears.
Well, maybe later. So, Nico, I would like also to ask you, because you live there and you understand the American mindset. When they hear like Greece and or Greek companies, do they actually go crazy? Like, I don't want to hear about this because the country is a mess, or it's not really related?
I would say when people hear about Greek companies, they don't have a reference point, which is neither good nor bad, meaning that because the Greek tech ecosystem is so small, there are no role models, there are no notable founders from here. Practically what it means is that people don't know what the benchmarks are. There's no big company that a lot of good talent has come out of. So that's what we need here. We need to create a number of role models and hopefully a unicorn or a successful company that everybody from other ecosystems would be like, oh, you know, the Greek tech startup scene could be promising because look at this success story. So at the moment, we're in this gray zone where, frankly, you know, people don't know much about us, and it's like, oh, it's another tech company. Let's evaluate them alongside everybody else in their sector.
Okay, good. So I would also like to ask you, what is it like to write this big check of $500 million? How is it? Like,
Sure. So I mean, the smaller the check, which, you know, again, you know, for most people, writing $1 million, $5 million check is a lot of money, but for a fund of our size, it is not a huge chunk of money. It's based on conviction about the person, like the founder running the show, as well as the answer to the question, what if what I just heard becomes true? What if that person is right? So for sure, there are a lot of sleepless nights, regardless if the check that we write is $2 million or $50 million. But of course, the larger the check we write in a company, we have to make sure, at the very least, that we're not going to lose our money, at the very least, because losing 50 or 75 million bucks, it's really painful. It means that we would have to make up for that hole with some other, you know, bigger exit. But if we lose, you know, 5 million bucks, we can, you know, afford to do that like 10 times. But in general, out of 10 companies we invest in, 6, we lose our money or we get it back 50 to 70%. A couple, we get our money 2-3 times back. 1, we get our money 5 times back. And the 10th one, we get our money 20 to 50 times back. So that's how the math works.
I heard you during Startup Grind Global Conference, and I really loved your concept about the notable founder that you just mentioned. So maybe if you could just share with the audience what it is, and if you're not a notable founder, what do you have to do to get there?
Yeah, so especially if you're a first-time founder and people don't know who you are, they don't know where you work for, they don't know anything about you, and you want to build something that could become a great company and have amazing people work for you, have terrific investors get behind you, all you have to do is to make a case that you're a safe bet. Your company may not be a great investment opportunity yet, but you as the founder, you're a safe bet. And why are you a safe bet? Because you have incredible co-founders who had a lot of other opportunities and they ended up joining you. Or you have some unbelievable advisors, like 1 or 2 advisors who are notable in their fields, and they are advising you. Or you're a really good storyteller and you've convinced a couple of writers and in the press to start telling your story. And for sure, you know, everybody has to start from somewhere, but as a founder, normally you have crazy passion and insane enthusiasm about what you're doing. So the bar is, I think, really low. Like, you can totally find what one journalist write about your company. You can totally find one great advisor who wants to pay it forward to do something really helpful to you. And in general, everybody in the tech ecosystem is one unbelievable mentor, advisor, investor away from anybody else. Like, that's the beauty of the tech world, because there is not a lot of legacy. and most of the people in the ecosystem are on the younger side, you can get connected pretty much to anybody very easily. Like I was a graduate student at Stanford, didn't know anybody. When I went to California 9 years ago, I really didn't know anybody. I knew a couple of other kids that went to Stanford with me, but I was cold emailing Elon Musk, Steve Blanc, the CEO of Intel, and most of these people ignored me, but I was persistent, and some of them ended up offering a meeting. So the worst thing that can happen to you when you're getting started and you're cold emailing people or you're trying to get hold of others is people ignore you. That's not, too big of a cause.
So you have to know how to hustle.
Oh, absolutely. If you're a first-timer and you don't hustle and you work 9 to 5, it's not going to happen, The only advantage that small companies have over big companies is that they can grind it out and they can move very quickly. That's the only advantage.
Great. Alexia is also here with us, so maybe another round of applause for Alexia who just joined us.
Welcome.
Welcome.
Thank you for having me. You probably relate to this. I couldn't get a taxi. I thought we had solved this problem in 2010 and again with Taxi Beep, but no, this problem will never be solved. Mic drop.
Not in Athens.
Nowhere. Not in America either.
Good. Great. You joined us at the right time. We were just having a few questions about funding and VC, and I just wanted to ask you a few things about VC, because you have now started your own fund, right? So, Alexia, first of all, you quit your job to go back to school, and this is like
the most Greek thing ever, right?
The opposite thing that all the other founders are doing in the US. Like they quit school to start something new. So how did it feel, and what people told you? Like, are you crazy? Did people tell you that?
Yeah, Paul Graham actually told me I was crazy. And he's like, what will happen when people realize that they have more to learn from you than you from them? And I'm like, I don't think that's ever gonna, sorry. I don't have that high an estimation of my own abilities to be able to go in and teach at Stanford yet, at least. But yes, people thought I was really nuts. I do things because I'm curious and I want to learn. I don't really do things for a lot of the reasons that one would think would do things, like money and coolness and glamour, other than wear the skirt, which is totally glamour. But job decisions I do because of curiosity. And I was very curious to see what they were teaching at business school, because people seemed to lord it over my head that they knew what an IRR was, or they knew how to calculate the net present value. Whenever, and this mic is really bad, sorry. Whenever I was doing research as a journalist, people would make things purposefully vague, like valuations of companies. For example, my gut was that people was doing this with valuations, like, oh, this is $2 billion. And people would try to explain, no, there's an equation, and it's about price to earnings, and there's math behind it. I'm like, oh, math. And then when I went to business school, I realized, no, there's actually no equation. Most of the time, it's what the market will bear, what will clear the market. So I went because I wanted to learn that. I wanted to learn whether or not decisions were made with some quantitative framework. And for the most part, I learned that no, they were not. But people were definitely using data and quantitative frameworks to validate or to prop up the decisions they were making purely on intuition and gut.
Speaking of data and making decisions based on data, what is with this craze of e-scooters?
Oh, no.
Like everybody's rushing to invest in e-scooters.
So people are going to make money. I think the early investors in Bird have already made money. People are going to make money. I think it's definitely changing the way people get around in China. I think it is very novel. It's a new thing. It's trendy, and people like new things. I think there's a lot of reasons why it isn't the next Uber. I think the reason the valuations are so nuts, and the reason Bird was valued at $2 billion, is there's a lot of capital chasing too little opportunities. We're in a very strange point in the tech cycle where we're transitioning from the deployment phase of the internet era, so where the technology is at the top of the stack, and you're seeing monopolies like Facebook, Apple, Google take all of the pie. So we're going from that really end phase of one tech era to a new phase, the installation phase of the sixth wave of innovation, which is automation, robots replacing jobs, and the decentralized internet. So we're in a weird, strange time in the transition. And so you see stuff like e-scooters because there's a lot of money in the space and not enough actually good ideas.
And what about blockchain then? Because this was like a huge thing like 2 or maybe even 1 year ago. And then the whole thing just started crashing and it's still burning. Do you think that it's going to be dead in like 6 to 12 months, or is it going to...
Definitely not. And Niko might have a different opinion, but definitely not. Blockchain and cryptocurrency are two different things. I don't think blockchain is, I mean, the very nature of a blockchain is that they're eternal and pervasive and never die. Cryptocurrency has crashed, and that's fine. It's a natural part of the cycle. I don't think it's dead. I still think the most talented people in Silicon Valley are working on ideas that either are token-based networks or some sort of blockchain-backed type of protocol. There's not a lot of things happening in the top of the stack, but people are definitely iterating and building on products. Now, I think the financial capital, the currencies, will eventually track to the production capital, which is people literally working on cool ideas and new ways to incorporate this very interesting data structure.
Niko, you have a different opinion, I heard.
It's early days. The charts that I pay attention to is how many developers are working on committing code to blockchain projects. And if you check out GitHub, everything is up and to the right. The other chart I pay a lot of attention to is like the number of transactions that take place every day on the blockchains. And this, if you check it out since the beginning of time, like 7-8 years ago, everything is up and to the right. So clearly, as Alexia noted, there are a lot of super interesting, talented people who are looking into the space to start a company. For sure, the momentum is getting built up. But for the mainstream use cases, the technology is really immature. So the vast majority of the projects in the space, I would describe them as academic. Where in the future, in 5 years, when everybody's using this technology, these kind of problems are going to be prevalent, and we will have to use our solution. Very few existing use cases can be solved today with the blockchain technology. But we, as early-stage investors, are really, really eager to partner with ridiculously ambitious founders who are ahead of the curve, and they're building products with today's technology to solve use cases that people will be using these products for over the next 6 to 12 months. So I'm optimistic about the space, but it's not anything that's going to change our life.
I try to remain as independent-minded as possible. But that being said, the whole wonderful thing about the startup ecosystem in our community and our global community is that we support each other and we help each other. So even though we have a close relationship, we basically act like any actors in the startup community in that we really go out of our way to help each other out. But it's not like 100% thing. It's like a 50% thing.
Can you say one thing that you are very different minded on? Like one of you has more, the founding team is more important than the project, or that the market is more important than the founding team?
Am I more of a crazy person? Yeah, I probably do crazier things, like take more risk.
Yeah, so for sure, Alexia is investing in earlier stage projects than me. So that's one thing that gives us more clarity and more space to collaborate on, because Alexia would write checks like the first $100K, $200K check. We don't get out of bed unless we can write at least a $500,000 check, and even then, it is too little, money for us to invest. But I would say that Alexia has probably a better filter for people than me, because I tend to be more optimistic. Whereas, I don't know, maybe the female nature, I don't know, or her background in journalism probably is that she has like a much better understanding of somebody's, potential. I spend a lot more time trying to understand the market, and if it's a market that's opening up right now in front of us.
Thank you.
Over there. No, he regrets. So, anyone else? This is a very shy crowd. Okay, anyway, they will get to it. Over there. Okay, go for it.
My name is Alex Bonatsos. I believe in ideas where they fix someone else's problem or a whole market problem, or you are more into a new idea, disruption, fast and break things?
So it depends on the sector, right? Because if it's in the financial services space, you cannot move quickly and break things. And that's a regulated market. Same for the healthcare industry. I think we went through an era where the likes of Uber, Lyft, Airbnb were like, we're going to do it our way, and then the regulators will follow and we'll deal with them. But this playbook is over now. So now people not only have to move quickly, but they also need to collaborate with regulators from the very early days. As far as I'm concerned, for sure, I'd love to meet founders who can walk in the room and paint a very detailed picture of the future. That I'm like, holy shit, if 1% of what I just heard comes true 5 years later, I want to be part of that picture. But this doesn't happen that often. Like, very few founders have this ability to create a reality distortion field that will tell you how the future world is going to look like, that ignites emotions of fear and greed, that you can't help it but get behind them. Very few founders are like that. And if you are this kind of founder, that's an unbelievable asset to have. It makes it easier with recruiting, with fundraising, PR, everything.
I think the era of move fast and break things for technology is over. We broke stuff. We broke democracy. We broke the world. We've already broken a lot of things. I think when Facebook built that into their model, they didn't realize exactly how much it could be abused. I would really like to see, I just invested in a company called True Story, which is trying to use the blockchain to fight fake news in building a network that incentivizes people to verify the truth, to verify claims. I'm much more excited to see people fix problems. I think tech has caused a lot of problems, and the kind of arrogant mentality that created those problems is exactly what we should wipe out of our industry. We really have a responsibility to build into what we create a sense of morality and ethics, and that kind of immaturity has no place in the new world. Yeah.
Hi, Alex. Several foundations, I think Rockefeller Foundation is doing that for sure, are trying to bring tech companies and VCs closer with municipalities and government work with government covers different animals. It's a huge business in general. Mm-hmm. My question is that something you guys have looked into or know about? Or?
I know Niko's looked into it. I've looked into it in a macro scale. So I was reading Tech Meme this morning, and 95% of the stories were some sort of government regulation around tech. So I think it'll increasingly, I think strategy beyond markets, tech strategy with regards to regulation will increasingly be a part of the industry and something that we really need to account for. I know for one, using my phone in Europe, everything I land on is 20 different GDPR notifications. So it's almost like we're building different internets according to the laws of the different municipalities and different countries and continents that we exist in, and that's going to be a larger thing moving forward, for sure.
So what I would say is that GovTech, government technology, is becoming a more important sector for us to invest in over time. And the reason is the sales motion to get in front of these customers is much more simplified than what it used to be before. So if in the States, yeah. So if you don't have to go through the RFP process, which is a very painful and time-consuming one that takes 1, 2, 3 years, which a startup cannot, do because they will have run out of money. They can't demonstrate strong progress. But if you can fly under the radar and you can start signing up customers because your product is much better than the shitty stuff they're using.
It's a real pleasure to have you. Thank you so much for your valuable time.
Ευχαριστούμε πολύ. Thank you, Dimitri, for the questions. Thank you to Pano Papadopoulos for putting us in touch. And like he's the godfather of making it happen today. And thank you all for the attention. I'm sure you have better things to do. Summertime in Greece is always great, to be on the beach.